Hello everyone. In this class, I am going to teach you about cash book. So it is one of the most important tools for tracking cash transaction. So let's get started. Cash book is a book in which all transactions relating to cash receipts and cash payments are recorded. So it is nothing but it is a summary of all cash receipts and cash payments. In this book, all the cash receipts and cash payments are recorded, and it is prepared on monthly basis. It is prepared on monthly basis, and this book, cash book, it is also called as a book of original entry. Why? Because cash book is called a book of original entry because it is the primary record where all cash and bank transactions are first recorded before being posted to the ledger. So that's why it is called as a book of original entry. And next, third point is, when a cash book is maintained, transactions of cash are not recorded in the journal, and no separate account for cash or bank is required in the ledger. Means what? When a cash book is maintained, transactions of cash are not recorded in the journal. It means normally all business transactions are first recorded in the journal. First, what is the first step? First, we will record all the business transactions in the journal. Means first we will pass the journal entries. However, when a cash book is used, means when cash book is prepared, cash and bank transactions are directly recorded in it. So they are not recorded again in the journal. And means the transactions that are related to cash and bank, they are not recorded again in the journal. Means once we prepared the cash book, we have to record all the details, means all receipts and payments in the cash book. They are not recorded again in the journal. And next one, no separate account for cash or bank is required in the ledger. Means what? The cash book itself acts as a ledger for cash and bank transactions. So the cash column represents the cash account and the bank column represents the bank account. Therefore, there is no need to create separate ledger accounts for cash or bank in the ledger. This is the meaning of, means there is no separate account for cash or bank is required in the ledger. Means when a cash book is maintained, transactions of cash are not recorded in the journal, and no separate account for cash or bank is required in the ledger. So this is the meaning of cash book. Now we will see single column cash book. What does it mean? Single column cash book, it means it records all cash transactions of the business in a chronological order. Means it is a complete record of cash receipts and cash payments. Cash receipts and cash payments. This is single column cash book. In single column cash book, the format is date, receipts, LF, amount, and credit side, date, payments, LF and amount. Debit side represents receipts and credit side represents here payments. Here bank column will not come, only the cash column. So it is a complete record of cash receipts and cash payments, and no bank column. Only cash column is there in the single column cash book. Now we will see the items that are not included in cash book. What are the items they are not included in the cash book? First one is credit transactions. First one is credit transactions. Means what? The transactions that do not involve cash or bank are not recorded in the cash book. Transactions that do not involve cash. For example, sold goods to a customer on credit for rupees 10,000. On credit means what? They will make the payment at a later date. Here there is no immediate payment of cash. Cash is paid at a later date. And another example, purchased goods on credit from a supplier for rupees 7,000. Here they are purchasing the goods on credit, means they will make the payment at a later date. They will not immediately pay the amount. So in the cash book, credit transactions are not included. And second one is non-cash expenses. What is the meaning of non-cash expenses? See, non-cash expenses, they are the expenses recorded in the books of accounts that do not involve an immediate outflow of cash. Means these are the expenses, they do not involve an immediate outflow of cash. For example, depreciation of machinery. This is a non-cash expense recorded in the journal and the depreciation account in the ledger. So, first one credit transaction and second one non-cash expenses. They are not included in the cash book. And third one is adjustments and accruals. Adjustments and accruals. Accrued expenses means what? Means they are the expenses incurred but not yet paid. These are the expenses incurred but not yet paid. And what about prepaid income? It means income received in advance. So transactions like accrued expenses or prepaid income, they are not part of the cash book. For example, accrued salary of rupees 5,000 or prepaid rent of rupees 3,000. Here accrued salary of rupees 5,000 means what? Example, employees worked in the month of December but the salaries will be paid in January. So this is the example for accrued salary. And what about prepaid income? Prepaid income refers to the income received in advance for goods or services that will be provided in the future. For example, a landlord, he receives rupees 1 lakh as rent for the next 6 months before the period begins. Landlord receives rupees 1 lakh as rent for the next 6 months before the period begins. This is the meaning of prepaid income. So the adjustments and accruals means accrued expenses and prepaid incomes, they are also not part of the cash book. Credit transactions, non-cash expenses and adjustments and accruals. And fourth one, that is stock transactions. Means what? It means movement of inventory such as internal transfers or stock adjustments are not recorded. Means internal transfers or stock adjustments, they are not recorded. For example, transferred stock from warehouse A to B worth rupees 20,000. Such transactions affect the stock account but not cash flow. So stock transactions means movement of inventory. They are not included in cash book. Next one is barter transactions. It means what? It means exchange of goods or services without cash payment is excluded. Exchange of goods or services without cash payment, that is excluded. For example, exchanged your old furniture for new equipment worth rupees 15,000. Means here without cash payment you have exchanged your old furniture for new equipment worth rupees 15,000. So barter transaction also not included in the cash book. And next one is drawings. It means what? Goods taken by the owner for personal use. Goods taken by the owner for personal use, they are not recorded in the cash book. Okay, this is about drawings. They are also not included in the cash book. And next one, discounts. They are trade and cash discount. Discounts, they are also not recorded in the cash book. For example, gave a trade discount of rupees 2000 on a sale of rupees 20,000. It means what? Trade discounts, they are deducted directly from the invoice amount and are not part of the cash transactions. Okay, this is about discounts. So, discounts, they are also not part of the cash book. And next one, investments and revaluation gain or losses. It means any changes in the value of investments or assets without cash inflow or outflow are excluded. Change in the value of investments or assets without cash inflow or outflow, they are excluded. So, these are very important. These are the items, they are not included in the cash book. First one is credit transactions, non-cash expenses, adjustments and accruals, stock transactions, barter transactions, drawings, discounts and investments and revaluation gain or losses. If these transactions are included in your problem, you should not include them in the cash book. Now, I will explain this single column cash book through one example. See here. Prepare a single column cash book from the following transactions. First one, 1st Jan 2025 opening cash balance, that is rupees 25,000, means to balance brought down, that is rupees 25,000. And 2nd Jan 25 paid office rent, that is rupees 4,000 paid, means it comes under payment, means in credit side payment. And 3rd Jan received cash from Mr. X rupees 10,000, means these are the receipts, comes under debit side. And purchased office stationery for rupees 2,000. Purchased office stationery means you are paying the cash for purchasing the office stationery, that is rupees 2,000. So it is included, means it comes under payment. Next one is cash sales, that is rupees 15,000. Cash sales, 5th Jan 25, cash sales, that is rupees 15,000. It means what? Cash sales means you are selling the goods and services and you are receiving the cash, that is rupees 50,000, means it comes under receipt side. Next one, paid wages. Paid wages means payment of wages. Next one is received commission. You are receiving the commission, it comes under receipt side. Next one, paid electricity bill, that is rupees 3,000. On 8th Jan 25 you paid electricity bill, that is rupees 3,000, means it comes under payment side. So this is the problem. Now we will solve the problem. So here we have to write single column cash book. Single column cash book. Here debit side, date, receipts, ledger folio, amount. And here credit side, date, payments, ledger folio and amount. Here there is only one column, receipt and payment, because it is a single column cash book. So first one, January 1st opening cash balance, that is rupees 25,000, means what? To balance brought down, that is rupees 25,000, that is rupees 25,000. And next one, on 2nd Jan 25, see here, paid office rent, that is rupees 4,000, means you are paying the office rent, means it comes under credit side. See here, January 2nd 2025, Here we will write down by rent account, that is rupees 4,000. And next one, on 3rd Jan 25, received cash from Mr. X, that is rupees 10,000, means receipt of cash from Mr. X. From whom? Mr. X, means it comes under debit side. So to Mr. X account, that is rupees 10,000. That is rupees 10,000. Next one, purchased office stationery for rupees 2,000. Means you are purchasing the office stationery. For that you have to pay the cash. For purchasing the office stationery means you are paying the cash. So it comes under credit side and payment side. So purchased office stationery means on January 4th by stationery account, that is rupees 2,000. See here, by stationery account, that is rupees 2,000. And next one, cash sales, rupees 15,000 on January 5th. Cash sales means you are selling the goods and services. For that you are receiving the cash from the customer. So here to sales account, that is rupees 15,000. 15,000. Next one, paid wages, that is rupees 1,000. Paid wages means you are paying the wages, means it comes under payment side. So this is single column cash book is very simple. Receipts debit side and payments credit side. All the receipts they are comes under debit side, and all the payments you should record in the payment side, that comes under credit side. So here paid wages. So to by wages account, that is rupees 1,000. And next one, received commission on 7th Jan, received commission rupees 5,000, means it comes under receipt side. So on January 7 to commission account, that is rupees 5,000. And next one, on 8th Jan, paid electricity bill rupees 3,000. You are paying the electricity bill, means it comes under payment side. On January 8, by electricity bill account, that is rupees 3,000. See here, by electricity account, that is rupees 3,000. Now we will check the total receipts and payments. So the total receipts are, 1 minute. Yeah. First one is rupees 25,000 plus 10,000 plus 15,000 plus 5,000. So totally it is 55,000. So our total receipts rupees 55,000. And now we have to check the total payment. Total payments are rupees 4,000. See here, 4,000 plus 2,000 plus 1,000 plus 3,000. So that is rupees 10,000. So our total payments, they are 10,000. 3,000. So now we have to find out the closing balance. Okay, paid wages 1,000. Yes. See here. Here debit side is more than credit side. Debit side total is 55,000 and payment credit side total is 10,000. So receipts closing balance, that is equals to receipts minus payments. 55,000 minus 10,000. That is equals to rupees 45,000. So here write down in the credit side, on Jan 31st by balance carried on, that is rupees 45,000. Total is 55,000. Now we have to brought down the balance to the next month. So on February 1st 2025, to balance brought down, that is here, see, by balance carried on amount is 45,000. In this, to the balance carried on opposite side, we have to write down to balance brought down, that is rupees 45,000, but the month will change, that is February 1st, because single column cash book they are prepared monthly wise. Okay, so in this way we have to solve the problem. I hope this concept is clear to you all. If not, please leave a comment. Thank you.